on board Mr. Jonathan Schiessl, the Deputy CIO at Westminster Asset Management. Jonathan, hi. Thank you so much for waiting by so patiently. Just give us a sense of how you're looking at the markets, both globally as well as back home, because there is so much back and forth commentary between US and Iran when it comes to the Strait of Hormuz. Is it open? Is it closed? Oil prices have continued to be sticky around $83, $84 a barrel. And you've also got gold that is once again spiking up. How are you looking at all of these developments playing out?
As you say, it's a push and pull market. There's lots of things to be worried about on the one hand, and there's also on the other hand an underlying economy that still seems to be pretty good, which ultimately is pretty good for earnings, which remain very elevated. And therefore, it's, there's plenty for the bulls and the bears to feast on at the moment. I think all in all, we are, I guess you wouldn't call us neutral on equities. We're probably slightly more bullish, but very conscious that there are factors at play which could change very quickly, obviously in the Middle East and other conflicts globally. It's tricky. And clearly behind all of this is inflation. And that's the key point, what's happening with interest rates, both short-term and long-term rates. And that ultimately will influence pretty much everything going forward.
And Jonathan, interest rates will be influenced very likely by crude. And crude is so volatile. What's the sense like? What are you penciling in terms of the print this time around? A couple of days, or rather tomorrow, right? So tomorrow, US time, what's the CPI print expectation?
Look, I think obviously the last number we had was a bit weaker than expected. Clearly, I think, as you mentioned, crude and inflationary pressures to our mind are going to be building and become increasingly evident. We don't think the Fed's going to particularly react to any, even if inflation comes in slightly stronger. We think the Fed is going to sit on its hands for the time being for various reasons. But certainly we as a house are more on the inflation is a problem sort of seat. And we think we're currently moving in to a global picture, which is we've still got decent growth, but we've got an inflation problem coming.
Last time we were speaking, I remember you did say that the route that we were seeing in some of those AI-related stocks, that correction was overdue and necessary. What are you making of the global IT sector, especially when it comes to AI, and how are you looking at this sector for India?
Yeah, it's clearly the software space which has got so brutally derated globally and within India. Clearly, we've seen a bit of a rebound over the last month and a half. We've seen that in India. We've seen that also globally in a lot of these stocks which were viewed as at risk from AI. I think, though, from our perspective, nothing has really changed. These stocks were oversold. Some of them clearly are still very important and will play an integral part in, some of their clients going forward. But there is still some doubts about the business models going, as we move ahead and how AI will impact that. So it's leaving us on the sidelines. We are not going to chase up some of these recoveries because of that uncertainty. But there are certainly stocks which we think will survive and will utilize AI and do very well out of it that have been brutally oversold. So, on an individual stock basis, there are some interesting names, but broadly speaking, I think, there is still uncertainty in certain sectors. Obviously, the AI trade, what we've seen so far over the last few months is a very quick rotation. Initially, obviously quite a few months back, it was the sort of Magnificent Seven names that were leading the initial rally up. Then that rotated into the memory makers in South Korea and elsewhere. And that's obviously coming into a little bit of a headwind at the moment as those stocks did so well. I think we're just going to see this sort of, continual rotation from one perceived winning sector to the next over the next few months. But in the short term, probably the memory stocks had done too much, and Some of them have come down, a fair way. Yes, they're sort of stabilizing, but yeah, it's difficult to work out really what to do with some of certainly the memory names, which are very cyclical and have rallied and come back a little bit. We do sort of agree with the view that for the memory makers themselves, that demand will look very robust for a long time coming. But obviously, the point being is what price are you willing to pay for all of those companies, and that's where it gets more complicated.
Jonathan, the other piece that's at play is that there is a rotation towards real assets, not just gold, but also oil and gas, also steel, also basically commodity-led or driven. How do you see that trend play, and where exactly in the cycle are we globally? You understand Asia really well, and of course the globe. Give us a sense of that.
Yeah, so I totally agree with that trade. We ourselves have been quite bullish on commodities for some time, and real assets, as you say. I think real estate is a bit more difficult, but certainly if you're looking at equity markets, some of the more cyclical companies that own actually real assets, I think will look, interesting going forward. And this is, after all, a way to hedge yourself against an inflationary environment, which we believe is coming, up ahead. So yes, I think the push into commodities have a lot further to run. Like all of these things, there'll be ups and downs, but we are still quite bullish on commodities. Oil, and we've discussed oil a little bit at the beginning. Oil to us still looks, quite mispriced for everything that's going on out there. And oil still looks quite cheap, certainly very cheap compared to gold. So yes, all in all, though, we do like and continue to like commodities and real asset plays going forward.
Those are a couple of baskets that you're liking. Jonathan, what else is looking attractive amid a market like this? Any other themes, sectors that you are right now bullish on?
Yeah, I think, again, a sector that's done reasonably well, maybe not so much in India, but globally, is financials and banks. Obviously, they're benefiting from the rising yield curve. So banks have been doing pretty well globally. I think, as I mentioned at the beginning, the global macro situation is pretty positive. We're seeing a broadening out of capex, particularly in the US, into other non-AI related sectors. Banks are obviously going to be lending into that. So we think the banks look pretty good globally. And I think that will come to India. The Indian banks have recovered a little bit from their recent lows, but they're not sort of pushing up to new highs that we're seeing in some other markets.
And Jonathan, when do you see flows come back into a country like India? The timing of it critical. You've seen enough cycles, and I'm hoping that you can throw some of your perspective at us.
Well, when we look at emerging markets or markets globally, India is one of the exceptions, which has actually seen quite a significant derating over the last couple of years. I think, I guess it's why is India derated and why have other markets re-rated? I think, quite interestingly is, earnings, the earnings season and the earnings outlook in India looks good, but it looks good everywhere else. But everywhere else, we've seen actually earnings driving some markets. So we've seen the rating not moving up too much. India, on the other hand, as you rightly point out, we've seen a lot of foreign money coming out, chasing the AI trade elsewhere, which unfortunately India doesn't have a great representation to. I think it'll change, though. I think as we move through this AI trade, and the market's looking for evidence of companies who are going to start benefiting from adopting AI, be it the actual the guys who own the models, the big AI model owners as such, like Google and those guys. There's little evidence they're making money out of it. But I think more importantly, looking for companies that are adopting AI and using that as a productivity tool. And I think that will come, and I think that will ultimately benefit greatly a market like India. But in the interim, unfortunately, the IT sector, I think, as I said earlier, it has had a run, but there is still some uncertainty there. But otherwise, moving out of that, then the banks look good. I think the consumption side still looks attractive. And I think, broadly speaking, investors will be looking keenly at India and when to reallocate into it, but probably not just yet, because I still think we are in the midst of this AI excitement.
Hoping for that and a relook from the FIIs towards the Indian market. You did say banking looks good, consumption also looking good at this hour. Jonathan, really appreciate you taking the time out and speaking with us today. Thank you so much for your time.
Thank you.
Thank you.